Alrighty. Doc here from North America. Good morning, good afternoon, and good evening. What do we got going on today? Let's see. Which product do I have up there at the moment? That is the S&P. That's the S&P. Let's go to the Euro. Let's see. Where's the S&P at? I know I have the Euro on the J4X. So let's take a look at the. Let's try movement. Oh, I see why that was there. Okay. Let's go to day, week, Dookie. There's day, week, Dookie. That's NAS dollar. And there we go. There we go. There we are. You see all those nice little green dots that's going on. Line 14. Right there. There it is. Line 14. On the fact check spreadsheet. So I guess I should do this fact check, and I should put spread there and put sheet down at the bottom. I think that's how we should do it. So like this should be like S, and then this one should be H, and then this should be like E. That's not a cat. Let's do an E here. E and E, and put a T in there like that. Oh, what kind of T is that? Oh, we got to make that larger. That's why. As it spins away there for a second. But anyway, we're changing that around right now. Why not? 14 doesn't do it. Make it bigger. Like 16. There we are. There we are. And that should be, see, fact check spread. So we'll put spread in there. So we can just go with S, go with Shift P, and then R, and E spread. I think there's like an A and a D, right? So A, and then D. We gotta expand that one. But anyway, that's just spread. Yeah, that's right. I should know how to spell spread. All right, there we go. Let's make that bigger, and there we go. Is that big enough? Let's even make it bigger. 28. Enter. Escape. All right, anyways, fact check spreadsheet. There you go. That's close enough. All right, now let's take a look at the euro again. And there it is there, 113.35. Again, a lot of bouncing between the 112.70s and, the 112.60s and 13.40s, 13 something like that, 50s, 60s. Kind of bouncing in that range. A little bit more active than I was expecting. Yesterday I was really whining about the summer doldrums. And there's no doubt that every trade should be taken fast, as far as I'm concerned. I don't know if there's a lot of carry through. We are seeing this massive buying in China right now. The Chinese government is probably very desperate. I don't know how you measure desperate, in a sense of, verbally and logically. Because, you see what the Western central banks are doing to keep everything as a status quo. Now, in a communist system, they opened up, I don't know, I heard some crazy number 5 or 6 million brokerage accounts in about 7 days ago. And boom, they're buyers. So they must have plowed money in. So they have to go to the public, hand them probably, what is it? The Communist Party has 56 million members. So they probably gave 8 or 9 million members, the highest ranking, brokerage accounts, and they probably funded it for them, and now they're out there buying, and that's the way it rolls. And that's how do you interchange that concept of the Western central banks propping up companies and currencies, keeping them at a status quo, and then you try to define, like the Chinese, which are a very small economy in some ways. 1% of less than 1% of their currency trades globally. They are a big manufacturer. An enormous manufacturer. They're one of the biggest manufacturers in the world, but they don't innovate and they don't create. So they just manufacture for others and take control of those companies because they're domestics, in other words, foreign companies come in, they manufacture for them, they ship them out. Chinese get the cash, or Chinese government gets the cash, and so it's a very odd thing to try to even interpret. But one thing is for sure, we can switch over to this. I want to just do that because I was looking at zero hedge, and it is the summertime, so we've got a lot of, let's minimize that, a lot of dead action. And so you can see here the headlines. Walgreens, 47 holes drilled, hit gold on a property with district. Okay, that's whatever that is. It says here, Hong Kong. We'll go after that one too. But there were 8 days of the Chinese. What is that? 8 days of 8th day. Here it is. S&P futures flat as China bubble mania storms higher for the 8th day. Okay, so you can see the chart there, and we followed through the FXI, which is now trading in the 40s, which is pretty cool. The product's all-time high. I think this chart here probably, let's see, what is that? That's the S&Ps. Okay, so that's not going to help us. They're hiding the stock indice there. Let's put it up on our machine. We used to show that once in a while when we got into a Chinese conversation. I know that's somewhat of a drift to the currency pairs at the moment, but they're all connected together because of the I guess you could say the stability and stimulation by central banks. So they're related, but they're not, it takes a couple of connections to get there. And then we'll go back to the currency there because it's just, to me, it's fascinating. I'm seeing that story. And I think that's the strength we're seeing right now. The question is, how long do they survive? Let's just go through the story. There's the Shanghai Composite. Let's see how far back they go with this. Because I'd rather use their chart. Okay, so there's, what is this? This is like 2000. Okay, so this is just the Shanghai is going up about 450 points, which is a pretty good move for a 3,000 index. Now let's try to give it a little bit more perspective. Let's see if we can find another chart on here. Anyway, I didn't read this article. I just saw the headline. Thought it was fascinating. And let's go to our quant. Wait a minute. You know what? Let's try J4X. See if J4X has a Chinese index. Let's see. Brent, soybeans, no. Deluxe, the DAX in Europe, the cable, the Hong Kong index. Let's see what the Hong Kong index looks like. We'll go back and look at that for like, we'll put a weekly in there. See how that looks. See, it's up firm. Okay, so we're looking at back in 2018, it was trading in the 34,000 area. And going all the way back to 213. Wonder if we put a monthly in there, if it'll give us even more insight. No, the monthly doesn't do anything. There's just the monthly. You can see it all on one screen. So they are bouncing back on that. That's pretty cool. Let's see what else they have over there. That is the Hong Kong. And then that's the Nifty 50 out of India. Let's see that just for the sake of it. Since we're trying to compare different exchanges. That's interesting. It's climbing up. That's a monthly. And then the rest of them are U.S. indexes. And then they go into stocks. Okay. Let's go back to the euro. Or let's go back to the Hong Kong. Let's go back to the Hong Kong. I find this fascinating. If it's not, and someone wants to look at something else, just say so, and I'll drift right to whatever you're interested in looking at. I don't have to follow this path, but I thought it was interesting from the headline. And so that caught my eye. Now let's go over to, what do we do here? Go here. I used to have the FXI in there, but you know what? Let's put it in this right here. And slide down to, where's the UUP? We'll make a copy of the UUP because that's a stock. That's an ETF. There it is right there. So we activate that. Then we make a copy of that. And then we put a paste action in there. So that's there. And then now let's put the FXI in there. And that's the ETF we use in the States here for the Chinese stock. And then let's put the weekly in there. As you can see there, it has leaped over the last 5 days. And it's gone from, what's that, the 40 area to the 47 or 46? What is that? 46.59? Yeah, it's almost 47. Pretty good move. Now, the all-time high, let's see if we can put this in here. The all-time high is like 70 some odd dollars. I think that's what it is. Let me just double check. I think it's like $70. So they're a good distance off, like the let's see. Oop, wrong button. The FXI on a weekly basis. Let's go to a monthly basis on that. There we are. All right, so the FXI. Last I looked, it was like $76. So it's better. It's not. It's like only down like 45-50%. So that's pretty good. You know, and the lows have been. Let's see if we can show it on here. Let's contract this. Let's try this mouse. There we go. That's better. You can see the lows were down in the 30s, 33, just in April. So that's a heck of a good move, you know. So there we are there. All right. So anyway, that's the gist of it all. It's very interesting to see it take out this top before the CCP virus kicked out, and now you can see that it's pausing here at the moment. The Nasdaq 100, as you can see on J4X, where is it at? Right there, has done the same exact thing. It's tech orientated. You know, in other words, how wrong can you be buying things like Amazon, Facebook, and Google, and Apple, and so forth? And that's doing the. Let's go to, what is that? That's a daily. So let's do a daily on that. And there's a daily. You can see it's climbing just like that, and then even more. They've really made a good charge at it. And I'm sure the Communist Party, you know, members who got the brokerage accounts, I'm sure that they knew this was coming along and they were nibbling away, because look at that support. Let's see if we can go back over to that. Let's see how I get there. Oh yeah, right here. You can see the support, how they were buying it, holding it, buying it, holding it, and then they come out with an announcement and they give out cash to lift it, and they do. They lift it. And so, you know, they've got to mint more millionaires in the Communist Party, because things are really being shaken up, you know, by the battle that they're doing with the United States. Especially putting out this CCP virus has really gotten everybody, you know, freaked out on the earth. So, all right. Now let's get back to the currency pairs. But I thought that was really interesting, and you know, it's a summertime, and we're just kind of kicking back and looking at a lot of different action, trying to find that opportunity to jump on. Remember, we're proactive traders, not reactive, because nobody is standing on an exchange floor anymore making trades. And you're reactive then. So let's see. Let's go back to the euro right there. And you can see it's holding up very firm. It's getting up to the June highs. You can see that right there. There's the June highs. It's battling its way up. You can see ours is doing here on a Chicago Quant algorithm chart, doing the same thing. A little surprise here. You see the little curve kicking out here. You can see the hesitation starting to develop on the J4X chart too. These two are lagging, which is okay. That's what they're supposed to do, and this is supposed to be leading. And so we'll see if this starts to roll over and starts giving issues. Now you see we went into the weekly buy here, and that's why on the the fact check sheet. Now why is that over there? Do we have to move it over more? I guess we do, don't we? No, that's size. There it is. So right there on the fact check spreadsheet, you can see here this 14, where is it right there? 7 weeks in a buy and 6 days in a buy. So that strength has been, you know, our math is picking up the strength, and you can see it here on J4X. It's showing the strength. It's there. Now the question is, how much higher can it really go? We're not really looking for a lot at this point. But then I don't, I think that, I've seen so many summers where you get this type of action. Next thing you know, 2 weeks later, you're sitting back where it all started from. So now there is some desperation out there. There's no doubt about that. The funds are desperate. They've gotten knocked out of their position from all that crazy swings, and they're looking for fundamentals to bring those swings back into the norm, I guess you would call it. But fundamentals don't really mean a lot anymore when you have quantitative easing, because the fundamental thing is never fight the Fed. That's like the major number one fundamental. Never fight the Fed. So if unemployment is 32 million unemployed, or 18 million, or whatever it is, 46 million, and the Fed is in there buying corporate bonds and buying ETFs and doing all these things, don't fight the Fed. They're liquefying the market. They're keeping it stable and firm. So number one, don't fight the Fed out of all these things. All right, let's head over to the cable. Doesn't seem like anybody's really in the mood to ask a question so far. And right there's the cable. I'll just keep on being me. And you can see here, cable is firm again. You see it's battling with the top end of this range we've talked about. J4X is showing it has more gas in it, that's for sure. It could probably lift up in here and do this stuff. You can see the two other lines that we follow, the slow stochastic and the rate of change, is still lifting also. And then we slide over to the quant chart. There it is right there. You see the same thing. This thing is lifting up. Yeah, but that's that on the euro, and that on the cable here is a little surprising, is that they cannot get the weekly to lift up. So maybe tomorrow they give it a little bit more push on the upside, but it's saying to us that as much as we saw, let's see, the stock index, we saw that happen yesterday. The dollar index was showing 2 days ago. I think we used it as a headline even. The dollar index was showing a bottom. And let's take a look at that right there. And there's the dollar index. And you can see it was doing it. Now it's rolled over. But at the same time, our weekly is trying to lift up. So, I mean, this is, the dollar index of the 5 major or 6 major currencies. And you can see it's been going down. That's why the other products have been firm. No doubt that the dollar index is enormously high. And so, people think, okay, the dollar is really, really strong. But it has been relatively weak now for, I don't know, 3 or 4 months. It's been selling down since the middle of March. And, and here it's trying to bottom in here. We got a weekly trying to lift up, just as we're seeing the other two trying to move down. There you go. So. All right, still no questions, so what we'll do is we'll just drift over to what we look at next, and that is we'll take a look at Turkish lira. It slid into a daily sell there yesterday. Oh, look at it, already trying to get back into the buy. So where is it at? Right there. So we're 31 weeks in a buy, 1 day in a sell, and it's already trying to go back into the buy again. This product here, that is just incredible. And I heard that more geopolitical war stuff, and it had no effect on the currency. So something's going on here in Turkey. I think we need to keep an eye on this. I don't know if this is going to be like an atomic shell, looking at not string theory as much as atomic theory, where an atom changes its loop, its shell, its where it's located. Remember, one element has, 52, another one has, it's like, different elements have different amount of atomic particles, right? Atoms, right? And so I know this is getting a little wacko like Doc always does, but, in the end result, like a copper. Copper has 63 atoms, okay? Nickel has 58. Obviously, if a nickel had 63, it would be copper. Okay, iron has 55. All right. What is silver? I forget what silver is. I remember gold. I remember someone talking to me about back in the 80s. Was it the 80s or the 70s? They were telling me something about I heard the Dow Jones Industrial Average. I had no idea what it was. It was the early 70s. But I said to them, I know what aluminum is. It's got 26 atoms, and I know what gold was. What was gold? Was it like 42 atoms? I think it was. Let me look it up and see. I forget how many atoms it was. No, is it silver's 107 atoms? And let's see if I can find gold. Yeah, gold's 196 atoms. And so, I had an idea about those things through counting atoms. Well, if you lose an atom in an element, it becomes different as time goes on. Depends on how many particles. You get these different types of atoms of the same product with a little change going on there. Well, so what we're looking at right here is, look at Turkish lira. Something's wrong here. It's like as if it's trying to shed some atoms. Something's going on. There's something going on here. I mean, that is pretty wild. That's compared to all the action we've seen. Let's go to look at it at J4X, because J4X is even more clearer when we look at those products. But it's like it's trying to shed an atom or something. I don't know. Let's see. What is that? Events. Oh, okay. Let's see what that is. It was 8:30. 30 times it 21 minutes ago. 21 minutes ago. And so, you're looking at that, and then you can see it on J4X. I mean, look at that. You could try to compare it to that to some extent. This is when the product was down in here, but you can see the action in it. And now that you had that there, let's see what that was. December, and then it had a big drop, and then built another run up. So, what are we seeing here? I mean, there's not much. I guess that's the only comparison with that, except for this is elongated even longer. It's going on longer than this was. And you can see what happened from it. It fell. It's nothing like it in its odd little history. So. And so that's the odd thing that we're watching right now, this Turkish lira, and no doubt they are doing some of the wildest things, aiming their guns at an ally, the French, threatening them. I understand yesterday they got bombed in Libya. They have an airfield there or something, a air base, and the Turkish air base got bombed. I'm not even sure. I didn't even read the story that much, but I'm not even sure who bombed it. But they lost some personnel, and sorry about that, people. And let me think, what else was there? It was like, some of the strangest things are going on. They're battling with Russia and the United States in Libya, and you would think that currency would be jumping all over the place, but instead, it reminds me of an atomic element trying to shed its some of its its protons and electrons. So we'll see. It's trying to shed its atoms. We'll see how that goes. I'm not even sure how to interpret that at this point. I'm just fascinated by the fact that it's doing it, and that's what we do. We look at charts. That's what we do here. We look at charts. We follow charts, and that chart is definitely screaming something. New trader. Okay. Oh, cool. Live cattle, feeder cattle, live hogs, corn and sewer. Excellent. Soybeans. Cool. There we go. Send that to Robin. All right. So that is where we're at. We see the Turkish lira doing something extremely unique, and so we'll keep an eye on that. All right, now let's drift over to where are we going from here? We usually go to Canadian. I think Canadian slid into the daily sell yesterday. That's line 20. right there. It's always funny how the Turkish lira and the Canadian seem to have some type of characteristic together. I don't get that, but anyway, there it is. It slid into a daily sell. Also, it looked like it was going to be at a daily buy for a couple days there, and then all of a sudden it just rolled right over. Let's go find it up in here. Right there, dollar CAD. Dollar CAD, where are you? Right there. There we are. So yeah, it was trying to move up. It was plus up in here during our webinar. We're thinking, okay, this baby's going to start moving. You see the J4X and all like that. The white line trying to lift, trying to get through the other two lines, and then it goes kapooey. That's a scientific term, kapooey. There we go. And so let's take a look at it on the over to the quant. Let's go to our quant charts. There it is there. And you can see there, it went kapooey. Went into a cell there. I guess what we got to do is put another, where's the cell line? I didn't put the cell line on there. Let's do that. Yeah, that's a scientific description, kapooey. All right. It also kapooey can hit the fan. I think that's how they usually refer to it as. Kapooey hitting the fan. What's interesting is the weekly is trying to fight its way in to stay in there. So we'll see what that does. We got another day to go, and this is Thursday, so we'll see what they do there. Kapooey. Let's see. Oh, now let me slid back to the chat line. No, nobody's chatting. Okay. Doc's going to have his first half hour with no chat. Okay, well, that's all right. I'll just keep on looking at different products. I got all kinds of fun things to look at. So, let's see, where are we at? Okay, so that's the Canadian. And so we're going to be, look at this. It's having its issues there. Let's see. Now let's drive ourselves towards the Swiss. And you can see there, 6 weeks in a sell, 5 days in a sell. And we've talked about the Swiss. If nothing else, they're investing so well that the currency has to lift. I mean, could there be a real takeover of a central bank? In other words, they have so many assets and lessen liabilities that someone would want to try to buy the central bank. I don't think that works that way, but that's what's going on. That's for sure. That's fascinating as all get out. Yes, indeed. All right, so we have you can see that it's still sliding down, just slow and steady. Yeah, you can see this is having its issues of trying to get going, the white line. And then let's put it up here on the Chicago Quant. Where are you, Quant? Right there. There it is. Same thing. Lots of red dots. You can see it moving south. Let's widen it out a little bit. You can see there. Did I ever put the little red line in there? I don't think I did. Let's grab this little green line and turn it red. Nah, yeah. Let's grab that green line, turn it red. So go went into the cell right there, and make it red. There we are. So this is not arbitrary, as we usually try to remind people. We had someone who had applied to the Chicago Quant Technologies website yesterday, and for charts. And they were asking us, those red dotted lines and those green dotted lines, are they automated or do you put them in there? I said I put them in there, but I only do it to remind people, because when you read the rules, you may maybe you're not paying attention as much, and so the lines go in there only because of the rules, and that is the white line is below the 0 line, the histogram is below the 0 line, and we got a red dot. So I mean, with all that going on there, so if there's no dot, it's okay, it still goes in there. If it's a green and red dot, we wait a day, and then the next day you get short, but it's telling you it's going down. But as long as all the other parameters are still in place. So he was like, oh, okay, what about the dots? I said, no, the dots do it to them. They're automated. I'm just putting the lines in there for people. I don't really need to put the line in there. It's just to remind people that it's in a weekly sell. and it's going down. But I don't invent that. Like, oh, okay, I think I'll just throw a pink line in there and let's cross my fingers and hope that it goes down now for what is that? 1, 2, 3, 4, 5, 6, going on a 7th week. It breaks its parameters. Where is this? What product is this? This is what, Swiss? Yeah, Swiss. Okay, so we go to 21, and there it is. So when we go to dun 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 dun, the fact check spreadsheet, that's we're identifying what's going on, and we're just following the numbers. This is just we're following the math, and it's consistent, steady, and straight all the time. It stays in an 8.5 out of 10 being accurate. Sometimes it can get really crazy and be even more accurate, and then this time of the year it brings it down to the 8.5 area because of sloppy sloppy markets, that type of thing. So, all right, let's see. Where else are we? Do we have any questions? Nope, no questions. So we've breached the first half hour with no questions. Okay, that's the way it goes. Maybe everybody's tired. It's the summertime. People just kind of want to kick back, listen to Doc talk about something. Maybe look at the charts, turn the volume down, not listen to Doc. Anything's possible. It's quite all right. And there we go there. You can always follow the recording afterwards, I guess. Either way, it's quite all right. So there we are with the Swiss. Now, let's zip over to the yen, which is 19, the other major, and that is 3 weeks in a sell, 4 days in a sell. So let's see. Right there, it's going sideways down. Look at that. It's not exactly exciting. You can see this is being buried right there on the J4X, though. The white line is heading south. Hard, fast, and steady down to the low end of the range. You can see the slow and the rate of change is, moving down in that same direction. It's doing the topping area just like it did here. It's doing it here only with a lower high. Now, will it go after a lower low? I kind of doubt it. It kind of looks more like a triangle going on in there. Maybe even considering it a flat triangle. So that's probably where we're at this point. And so there is the last of the majors. Is that the last? We did euro, we did dollar. Dollar. We did euro, we did cable, we did yen, and we did Canada, and we did Swiss. Did the saltine. They're the 5 out of 6 products that are in the dollar index, and in the kroner is the 6th one in there. So we don't really look at the kroner, but we did. Someone asked about the kroner a couple days ago, and we did look at it. It was interesting at the time. We paid attention to it to whatever level we did. In this era now of quantitative easing since 2008, 12 years now, all the pairs trades are active and dynamic on some level now. That's because the central banks are trying to spread out the risk and spread out the responsibility of keeping stability. Can I say that again slower? I think so. Spread out the risk, and at the same time, they're trying to spread out the responsibility to keeping everything stable. That's even better than the way I said it before. So in other words, they want to keep everything stable, and that's what the central banks are fighting to do. Now, if Bank of Switzerland, the National Bank of Switzerland, keeps on investing so smartly, someone's going to want to take over Switzerland. Wonder if we can make them like the 51st state or something like that. I mean, they're really doing a good job. Maybe we could get them to start. They like guns, so they have a good Second Amendment thing, so that works well. I think they have a good first type of amendment where free speech, so they'd fit into the system over here pretty well. And then and maybe we go from there. Maybe we need. We have Samoa as a district, and we have Philippines as a district. We have the American Virgin Islands as a district, and I think we have like 4 or 5 other we have like 6 or 7 districts, right? Puerto Rico. You see how bad Puerto Rico is. If we picked up Switzerland as a district, it would clean up the mess, and at the same time they could vote in our elections. They could have some fun and vote in our elections. So I don't know. I just like the responsibility of the Swiss the way they are. They probably don't want to be part of this crazy country at this point, but they are damn good at investing. That's for sure. They were buying the lows, and I was impressed with that. I did a whole webinar. I did 2 webinars on that about a month and a half, no, 2.5 months back. I did 2 webinars on that. I was so impressed with their actions. So, all right, now we'll drift over to what we do is we go from, usually when we look at Canadian, we usually look at oil. But what we'll do now is instead we'll go look at NASCAD. And just the fact that Canadian's going down against the dollar, maybe oil might be firm. I don't know. We'll take a look and see. But let's look at NASCAD. No, that's the wrong thing we want to look at. Right there. There it is. NASCAD. Right there. And it's showing some firmness today. But I believe in the spreadsheet, it went into a daily sell yesterday. It's 7 weeks in a weekly buy, but went into a daily sell yesterday. But it looks like it's perking up there today. So let's put that up on the screen. Let's go check that out through Quant. NASCAD. And NASCAD right there. There we are. And so that's kind of showing some strength there. And if the oil, if Canadian's going down, you would think that the oil is probably going up. Crude oil is, I have to go take a look at it just to find out. Yeah, it's almost unchanged. It's down only 7 cents. So the high today was 41.12, and it's trading at 97 right now, so it's only 15 cents off of that. The low today is 75, so that makes it like 20 some odd cents. So it's pretty quiet, the oil market at the moment. And that's kind of like usually, puts strength into the Canadian, and it's doing that. And it usually puts strength into the NASCAD, and NASCAD is trying to come back. It's trying to get back into the buy. At least, is it doing that there? There's, yeah. Now there, wait a second here. Where's the sell at? I thought it went into a sell yesterday. Maybe I was looking at last night, and I must have missed it. It must have been after 5 o'clock Eastern Standard Time. So it didn't go into the sell, and it's still in the buy from here. 1, 2, 3, 4, 5, 6, 7, 8. So it's back to 8. It was 7 yesterday. So NASCAD, let's put that back into the buy. NASCAD. Where are you? Right there. So instead of it being in a sell, it's still in the buy. And I must have saw it when I took the numbers, and it was today's. In other words, they start charting today at 5:01 yesterday in the evening. So it kind of messes me up a little bit there, and I wasn't paying attention at the time. I saw the red dot, and at the time, you can see the low there. It had pressed this down below it. But as you can see, it did not settle in a sell. So it's not in a sell. It's still in a buy. Okay, that makes sense because look at oil. Let's go look at oil in here. Because oil's holding up really strong in here. Right there. Light. Where's it at? Right there. Light. Yeah, look at that. It looks like Turkey, doesn't it? I don't know what's going on. Turkey's looking, the oil, crude oil is trading the same way Turkey is trading. I don't know what that means. What has got these things jumping around like that? I don't know. Maybe it's the summertime doldrums. I don't have an answer for it. I can only follow the numbers, and I can't even put geopolitical stuff to it because it doesn't seem to care. Oil or Turkey doesn't seem to care about. I mean, they supposedly took a real beating in northern Syria a couple days ago. You would think that 3 months ago that would have shaken the currency. Them losing a base or being bombed in one of their bases in Libya, that would have shaken the currency. I mean, the currency doesn't seem to want to move. Maybe people have just given up on it. Maybe they figured, okay, Aragon is not going to change any policies. Maybe it's going to stay like this for a while. Maybe it's something like that. Maybe that's what it really is that, there's no conviction. Or let's put it this way, the people or the funds who trade these things right now don't seem to care. It's one or the other. Maybe they're all on holiday. Excuse me. They could be all on No virus. No virus. Water went down the wrong way. No virus. No virus. Okay. So, excuse me. So maybe that's what it really is. It's the summertime doldrums. Maybe those funds have walked away, and maybe nobody cares. I mean, that's the only thing we can interpret out of the charts themselves. All right, so you can see that oil is pretty much flat out of all this. When we look at the quant, right there, let's put that up there. That's what is that? That's the S&P. There's the oil right there. You can see it's holding on. It's not going into a sell. It's quiet. A lot of green dots, you know. What's the spreadsheet say? The spreadsheet says 7 days in a buy. Look at gold below it. 15 days now in a buy. You know, Robin and I have been talking about, especially Robin. He's been totally fired up about the metals. And it does seem to justify it. So why don't we do this? We'll drift from, we've just drifted from Canadian and NASCAD to and oil. Now let's drift over to the metals. So what we'll do is we'll put the metals up there. Right there. There's gold. You can see gold is holding up pretty well. Been in a buy since that line right there, and been in a weekly buy since right there. So now let's put it on J4X. Let's see what the contango is. All right, so they got gold trading at basically 118.12, 118.11 and a half, and we have the futures contract trading at 19. Looks like 19 even right now. So that's a $7 carry trade, and should be at 0 at this point. And we saw at the beginning of this week it was around $12, $12, $13 in that area. So it's come down $5, and we have seen some weeks where it starts off $2 or $3 and then climbs back up to that $12 area. 9-year high in gold. Yeah, I mean, it's rocking, isn't it? I mean, we are inching our way to all-time highs. So let's take a look at silver. Right there. Silver is doing the same thing. Lots of strength there. Let's see what the quant shows us on silver. Right there. Now, what happened there? Retry. There we go. So there's silver doing the same thing, trying to climb just like it is on J4X. Showing some real life. Wonder what the contango is with that. Now this is September, so there should be a little premium to it. So it's trading at 1938 on the futures contract for the carry trade, and the spot is trading at 96. So that's 4 and 30. It's 42-cent contango. That makes a little bit more sense, solely because it's a September contract, so it's got a couple of months. So there should be something there. But it probably shows more than anything else is that the hunger might be something well worth paying attention to. The contangos between gold and silver, and see if there's a insight, to that action itself. In other words, if there's, the wider the contango in silver, does the silver keep on rolling further? If the contango tightens up on the gold, does gold, calm down? We've talked about this. Robin and I have even put a story on, written some little article. It's not even an article. It's just charts and a couple of paragraph of idea, and how silver is pretty much outperforming gold at this point. And so you can see here, it's gone up $1, and gold is going up. I don't know. Let's see. What has gold done? So let's look at it through J4X because we can measure it easier with the time. So 4 weeks ago, I guess you could say, or let's say this is the 28th week. Let's look at the 20th week, and silver is trading at like 15 and a half, and now it's trading at almost 19. So that's what, $3.50, right? And then let's take a look at gold over the same time period. And gold was trading at the 1,725 area, and now it's trading at the 18. What is that? 1812. So, it's percentage wise, it's going up about $90. And when you look at silver, who is it? 54. One of them pays attention to this stuff. The ratio must be expanding on silver at the moment, because that's definitely a larger increase, a $4 increase, a $5 increase in silver over the same time period. There was a $90 increase in gold, or sorry, $85 increase in gold. Either way, that's a bigger increase in the silver than it is in gold, because it's a 33% increase, whereas for gold, a 33% increase would have been something like a $400 move, right? $300 move. So if it went up 33% from $1,725, that would have been close to a $500 move. So it only went up 80 some odd dollars. So we're seeing silver definitely outperforming the others. Interesting. All right. What else do we got going on here? So that is the metals market. And you can see silver is just marching solidly in one good direction. So, I saw another chart. It has nothing to do with pairs trades, but in an esoteric way, it does, of course. But in a non-esoteric way, it does not. There was a headline this morning in Zero Hedge, and what the headline said was, I'm going to show it to you, and I want you to, basically tell me that, does it make sense or doesn't make sense. So let's show you what the headline was. It was right there. Hong Kong, Tokyo report new single-day coronavirus records. U.S. deaths are starting to climb. Live update. Okay, now I clicked on the article, and I was like, oh my goodness, let's see what that shows. So then I went in. This is their charts. This is the charts they're using, and it's if I move it over, you can see that it's a tweeter. It's the articles from Twitter. So, and you can see here, this is the last one down at the end. Let's see if we can move this over more. Can we move this over more like that? How do we? If we go like that, does it go away? Okay, there it shows you. There's the bump that they're calling that it's creeping up. It creeped up there, it creeped up there, and it creeped up there. And let's see if we can make this biggerish. There we are. And so I don't see how it's creeping at all. Now what's more interesting is here is the daily test record, which is really cool. Something we rarely see, this type of data put out by the media. And so you can see that over the same time period, they've gone from 400,000 to 600,000 tests a day, which is a big jump, 33% jump, all right? Just like the silver. And then at the same time, daily cases have gone from the same time period from 20,000 to over 50,000, okay? Which is a pretty big jump when you figure, but because of the amount of increases, now they're doing, 600,000 a day, almost 650,000 a day versus 400,000 a day. 650,000, 400,000. So that's like over a 50% jump. So that makes sense. It's about equal in percentage. What was really curious is hospitalization has gone from 30,000 to only 40,000. So obviously, testing and cases do not match to the amount of people put in the hospital, but the media is making you believe the opposite, which is really curious. Now, the only reason I'm showing this on the webinar is that, the world pays attention to this every hour, every day. Every financial network is pounding us day in and day out, hour in and hour out. Literally every half hour we hear about it. Now, obviously, this is the P&L of it all as far as I'm concerned, the profit and loss. And right there is the death rate, okay? And you can see that the death rate is gone from like 500 and something to like 500 to like 500 and I don't know, 30 or something like that. I mean, it's barely moved. And you can see it's had those little pops before and then kept on sliding down. So, this, which is as far as I'm concerned, is the real news, the P&L, which the CDC came out yesterday and said that they've downgraded it from a pandemic and it's a epidemic, and right now they're getting ready to downgrade it from an epidemic to just the flu. So, in other words, there are not enough deaths from it to define a epidemic, and definitely not a pandemic. So, the media won't report that stuff, but someone was foolish enough to post all the charts. And so I thought, what the hey, let's save this in case we have time. If no one had asked any questions, if people had been in here asking questions, I would have never even shown this. But this is what's really going on here, and I thought it was really important to, just to show that this whatever's going on with this corona thing. One thing for sure, it has nothing to do with death. It's barely moving on the death scale, and that's our P&L, the death. Now, testing, better science, better equipment, better experience. Yeah, they're testing. They're almost double. They've almost doubled just in. You got to imagine, since April, where they were testing under 100,000 a day, right? They're doing 7 times that now. They're doing 650,000 a day. Okay. April 1st, there were 30,000 cases a day. Now there's 50,000 cases a day. It's only doubled. It hasn't even doubled. It's less than doubled. So obviously, it's slowing dramatically. And then current hospitalized, there were 20,000 a day in April, and now we're at 40,000. So it's doubled on the amount of hospitalization. Why isn't it? If it's going up 6 times, how come it's not 120,000 in the hospital right now? You see what I'm saying? These numbers don't match. Then in April we had 1,000 a day dying. Now we have 500 a day dying, and the peak was 2,000 a day. So again, it's lost 50% of its power. And when it comes to measuring from the highs, like everybody does in the finances every day, what's the high? What's the high? What's the all-time high? What's the 9-month high? What's the 9-year high? Okay. Well, it has dropped 75%. So, there's a lot to be said there, and we know one thing for sure. And this is what we do know, traders, and that is that when this virus thing, whatever it is, a political campaign or, CCP trying to destroy Western economics because they are communists. That's why they're the CCP, the Chinese Communist Party. Trying to destroy Western economics and capitalism. Whatever it is, whatever you want to choose, what they're trying to do, whoever it is, one thing is for sure. The numbers here show us that this virus situation is nowhere near as disaster as the governments are treating it, and the public and the media in particular. Like I said, every day, every hour we hear about this. We hear about the cases. We hear about the tests. But what we don't hear about is how the amount of hospitalization has dropped. We don't hear about how the deaths have dropped. Now, there's no doubt that the hospitalization is creeping up right there. You can see that. But the deaths are not creeping up to match anywhere near the hospitalization. So obviously, it is not as dire as everybody says it is. Okay? We do know 43% of all deaths are from nursing homes. It's a big number. Because what are in nursing homes? Old people who are sick. That's what's in nursing homes. So their half-life becomes even half of half when they're moved into a nursing home. So I think we're going to title this today The World Markets and the Virus. I think that's the best way to describe it. Speaking of which, let me go grab the machine. La machine. Let's do that. And I think that'll be the title today, because really there's not much going on. A lot of these products are going sideways. Some are doldrums. All those whiny things I talk about. So we're going to give this a title today, because I'll tell you, I wish people would watch this, is that the virus, the title, the virus compared to the market. Let's see. And that's really where we're at. Virus measured in market charts. How's that? That could be neat. There you go. And so that's where we are. It really shows us that these charts really show us that the media is really way off on reporting this stuff. And so that's probably why we see strength in, stock markets, and we see strength in currencies, and we're seeing strength in things. And you're seeing strength in the metals too. Maybe the uncertainty, the confusion, they're reaching for them for that, or just the fact that maybe they're undervalued. They could be literally undervalued. I mean, what is there? 80 some odd currencies now have gold, and gold in particular trading at all-time highs. And so here in the dollar, gold is still $150 under all-time highs. So, I mean, will there be like a bell rung when we see the no ad topic? Okay. So, new title. All right. Giannis is saying still use that one, Nicole. Let us see what happens. Okay. I got great charts last 15 minutes. I got great charts last 15 minutes. So that's really where it's at. Now, a classic, it was a Twitter. It started off as a Twitter thing. They were trying to scare people, but they made the mistake of putting these charts up. And I went and looked at the charts, and the charts are like, wow. I mean, it was just like, blow my mind, wow. I mean, it's screaming that there is a problem with the way the media is reporting it and with the reality. Those last two charts, currently hospitalized and daily deaths, say nothing's happening. It's not really that dire. It's the way it goes. So anyway, we're gonna bolt out of here. And this is Doc from North America. Tomorrow is TGIF. We will catch you on the flip side. So everybody have a safe and smart trading day. And that's pretty much where we're at. Happy trails to you until we meet again. Happy trails.